All right, here we are at the MBS Mortgage Bro Science. We're gonna go over credits today, okay? And this is a big one because it's gonna save you some money and help you out, okay? So the first type of credit, or excuse me, where I should start. What is a credit? Not to sound condescending, it's when somebody else gives you money, right? A credit card, someone else gives you money, right? It's not your money yet, you gotta pay it off. That's what a credit is. All right, now there's 4 types. You could say 3.5. We're just gonna 4 types. All right, the first one that comes to mind is a lender credit, okay? A lender credit. So lender credits are cool because that means your bank is going to give you money to pay for their fees and or pay for closing costs. All right. Now what you can do is you can actually increase your rate to therefore get a larger lender credit. So say you are strapped for cash, right? But you have pretty good income. All right. It's going to stink, right? Because you don't have enough cash to include closing costs with your home purchase. You can just ask, all right, increase my rate, a 1/4, 1/8, 1/2, hell, maybe a whole point. That would stink, but it could happen. Get a lender credit. This lender credit can help cover bank or lender fees, and therefore you can close. It happens more times than you would think when people don't account for closing costs when they're going to buy a home. All right, closing costs, we got another video on that, so if you watch that one, you know what I'm talking about, okay? Another credit, it came to light in my true life this past month. I crap you not, okay? It was a broker credit. Initially, off the top of my head, I said, there's no way a broker give a credit. So the story was, the purchaser, the buyer, their mom is their realtor. And instead of just giving them the money, because her big old commission check, after closing, she didn't want to pay tax on it, right? Clever girl. If you watch Jurassic Park, you know that one. All right. So she wanted to credit them. And I said, you can't do that. That sounds illegal as all sin. Oh, no, you can actually do it, right? So it's a broker credit. All right. Your realtor, if you know them, can credit you their commission. Therefore, they don't pay tax on it. And you don't pay closing costs. Now, realtors, they'll get 2 to 3% on a transaction, so that's super important, all right? Now, I said there's 3.5, 4, 3, because you can have a seller credit, all right, or a builder credit. The reason I'm saying builder is because more often than not, if you're getting a builder credit, the builder's also the seller, so it's kind of like 3.5, all right? And what this means is if you're buying a house and you do an inspection, all right, the HVAC won't work, all right, I don't want to fix it. I'll just give you a $10,000 seller credit, okay? This is a great way to save money and then have them pay for closing costs, okay? Now, super important, okay? These are called IPCs. What's IPC? Interested Party Contribution. All right, IPC, Interested Party Contribution. Depending on how much you're putting down on the home and what kind of home it is, albeit a primary home, secondary home, or investment property, the IPCs can vary. If you're putting down less than 5%, or say 5%, the IPC can't be more than 3%. Ha! Gay! All right, so the IPCs, they can't exceed a certain limit. Not only can they not exceed your closing costs, but depending on how much you're putting down on a home, or the equity you're going to have, they can't exceed a certain amount. And they're as follows. If you're only putting down 10% or less, your IPC, okay, 3%. All right, so if you're putting down 10% or less, the seller credit, broker credit, builder credit, or the lender credit cannot exceed 3%, okay? If you're going to put down 11% all the way up to 25%, all right, it cannot exceed 6%. You know what, I'll even write that there. So we'll just say 90 or less, all right? That's LTV, excuse me. Okay. It's easier way to say how much you're putting down. All right. And then anything greater than 25 or more, you can get a 9% IPC. So the IPC is something to look into, but be cautious of. And then you got to kind of wheel and deal there. Like, I got to break out my HP12C. And I got to do some math. I got 3 of these, by the way. Because I got to see, hey, listen, your IPC can't exceed this much, but you're getting this much. So we got to work the numbers here. Like, do I charge you some extra fees just so you can cover it? Or on the back end, is that how you work it? All right, at the same time, you can lower the purchase price, but then you don't really see the benefit of it until you reach the end of your term, which you're never going to do, right? The average life of any loan is 7 years, so you're either going to refinance or sell. So more often than not, reducing the purchase price doesn't really help you all that much, and it doesn't even reduce your monthly payment, and I'll get into that into another video using my HP12C. But yes, so we have a lender credit, a broker credit, and a seller/builder credit, okay? Depending on how much you're putting down. These credits cannot exceed a certain threshold, 3%, 6%, 9%, okay? And all this is actually public knowledge, all right, I'll have my buddy Pat and Randy, they'll put it up next to me here, is Fannie Mae Selling Guide. All right, on the Fannie Mae Selling Guide, if you type in IPCs or interested party contributions, it'll tell you. All right. Truthfully, I was rambling, so I don't know if the 6% is actually 10 or 20%, but you kind of get the idea. Depending on how much you put down, your credit cannot exceed the percentage of the home you're buying.
Get a life, nerd.